Hey traders, Nick here. I haven't done an EV video in like five minutes. No, I'm just kidding. I don't remember when I did the last one. This one is going to be like a little bit of everything, so buckle up. Um, like the video if you like it, or just make some comments. Keep them civil. We can discuss it. I'm open to the other side of the argument, whatever I say. So I'll start with Tesla, which is something that I issued a trigger on to 790 a while back, and I'll show you in a little bit. But before I go there, a little blurb about EVs in general. Consensus is that this is how we're going to be propelled in the future. I disagree, not with the current battery technology. And it's a matter of math. It's not a technical matter. What makes me think that is that the world produces, they say, 80 to 90 million vehicles a year. That was the rate. So currently, most of these are internal combustion engine, and I think 5 million, I don't know, I lost count, that are EVs. So if you want to switch that to have 80 million EVs be coming out every year, there's no way we can sustain, provide all the batteries we need. Moreover, have the landfill to sit on the batteries we don't use anymore. So I don't think it's feasible. Somewhere there's going to be some sort of a hybrid technology, and maybe Toyota will come out with it again, because they were the ones that actually laid out the EV market by making the hybrid acceptable with the Prius. They lost money on it, but they established the market, and then everybody took advantage of that after the fact. Like Tesla, they established the EV market because Toyota broke the mold of, hey, they're not all funny looking cars, and it's okay to buy something other than internal combustion engine completely. So anyway, somewhere along the line, there has to be a change. What QuantumScape's trying to do is not going to work. Solid state battery, not with the technology we have now for an EV scenario. Anyway, currently all these stocks are tradable, and the message here is I would bank on Tesla, NIO, XPEV, and maybe LI. Any EV company that currently has a P&L would be my choice. I don't risk money on companies that don't have a P&L. So I'm going to touch on Lucid. I'm going to touch on even HYLN and maybe RIDE, Workhorse, because they're interesting to a lot of you. So let's go with Tesla. Tesla, the breakout already happened. Right here, it was up to 790. So they delivered 790, and somewhere along the line in the chat room, I mentioned that 900. Actually, I was on a presentation 2 days ago, I think. Wealth 365. I was one of the speakers there, and somebody asked me about Tesla. I said, 900 is beckoning, and maybe a round number like 1,000 because people love it. And besides, this is not the same company that it used to be. So people that still short it based on fundamentals that they think they know about it are absolutely wrong. Let me show you. Don't take my word for it. This is the company overview. Debt to assets falling, profit margins rising. This is the biggest point, that it generates the cash it needs to operate right now. This is cash flow from operations, I believe, and it's 6 billion. So it doesn't need to borrow just to exist. And you can't deny the financial results. I mean, I don't care how they do it, it's there. So people who are still, this is a crap company, they're not looking at the actual financials. And now they have money to do the, quote, other stuff that they used to. So from a standpoint of shorting this company, it's ridiculous. You can short it for a trade based on charts, but not as a fundamental basis. So plus 22% are controlled by one person that's not going to sell. So anyway, it's coming up against a resistance. I wouldn't short it just based on that. Just if short-term trades, you probably miss the easy money. On dips, the easiest thing to do is on dips, buy it. That's all there is to it. Or trade it up via options, shares, whatever it is. And if you want a big range, this is weekly. These tails speak volumes. So any approach to 580 or lower are immediate buying points. 720 is the next buying point now. 760 is a buying point. Depends on your time frame. 680 down 650. I mean, these are levels that are significant on a weekly basis. Now, these tails and the breakouts will happen once they take these out, and then forget about it. So it's gone. NIO, my second favorite, I buy every dip, and I've yet to do wrong with NIO. This is a weekly chart to eliminate the noise. It shows that they fell into here on the March correction through no fault of their own. The NASDAQ was falling out of bed. They retested the floor in May. Also, it was a correction for the whole market. Bounced ferociously. That was way too big. They gave it back. They retested the floor. It was a place to buy or get long or not panic, not buy puts. It's the time to sell puts down here. So how do I trade it right now? I believe I commented on that today, so I should have some lines. Okay. Depends on your speed, so I'll zoom in as to what's going on right now. And the breakout was when they took out the prior failing points, so the 3680 or so. It has legs on it, technically, but it also has a lot of resistance. That orange line, I don't draw. That's actual volume profile information. So this is where they have been busiest trading it for this period of time. A couple months, 3 months. So it's going to be resistive. So this whole area is not going to be easy to just burst through and cover the gap, although this is the type of stock that can do it. Reason why I like it, also not because it has the best car, because it has China behind it. So it's less likely to face regulatory headwinds, because I believe the government is backing them one way or another. I'm not an expert in China, so do your own homework, but that is, I'm regurgitating what I've read. 42 is not a place to start longs, but if it goes above 42, you could chase it for a trade into 46 or 48. Repeat the same process around 47. So if you're not long into 47, that's not a place to start longs. So it's all about levels. And you can see, you know, the bears are kind of in charge and the bulls are up towards the upper end of the channel, of this descending channel here. You can see it visually. So the easy money has been made off the bottom. So a dip into 34, 35, if you missed this rally and you said, I wish I had owned it today, so on Monday or Tuesday, if it falls into 36 or lower, then maybe you might want to retry long with tight stops. XPEV is my third pick because it has a P&L and it's growing fast. And if it takes out these tops here, it's going to go. So it ran to here. This is a daily chart. It consolidated in a very wide range for months. Couple months maybe, and then if they break out from it, they're going to go. So buying it into 44 is pretty risky from the standpoint that this is where I anticipate there's going to be a lot of fighting going on. So in fact, that could start right here where it's at, but 44, like this candle, that's not going to be easy to take out. So this is where I say BDBR. So buy the dip if we fade, or buy the rip. So if it fades into 40 or lower, that'll be the place to get long, or even into 38. Depends on the market. And if it takes this out, today's high, or even this candle. So I'm going to put it here somewhere in the middle, just so it can bring, it's a alert to me, so I can look at it. So that is XPEV. So let's go to Lucid, because people have called it the Tesla killer or something like that. Those people are smoking something. At full capacity, Lucid production, whenever they start production, it's half of NIO at full capacity. I think their current capacity would be 34,000 cars. NIO delivered 50 already, and it's growing fast. So by the time they come to market, or actually they start production, NIO would be double of their maximum capacity of Lucid. Strike number one. So my beef with Lucid as a company, like in the future to be a stock like Tesla, that's looking way past everything, because it doesn't even have current production. So step one, let's get to market. Step two is expand capacity. So they make a great car. I'm not arguing. The car is beautiful. It has good technology. But my argument has been it's a niche market from the addressable, like how big a chunk from the EV can it take? So Lucid, as good as it is, it's a niche market for a lot of reasons. One I just mentioned, because of capacity. Second, that car that makes a huge mileage is 170 grand, and I don't think they're taking any more orders on that. The cheapest car is close to 80 on paper. So in real life, it's 100. That's my experience with cars. If the MSRP is 80, you cannot find one at the dealership for 80. It's going to be 100. So it's up between 80 and 100, which is pretty steep. That's the second reason it's a niche market. I would never buy a $100,000 car, and I can afford one. So that's all there is to it. That's a mode of transportation, point A to point B, depreciating asset. As soon as I put my foot in it, no way. I'd buy it used for half price, maybe, but not out the door. So anyway, niche market. So check your enthusiasm level. Be excited about the car. Put your $300 to reserve your own car out of it. But it's not an investment that's going to go ballistic, in my opinion. It is an excellent trading stock. So watch the range. So big with pretty nice levels. So it makes it a nice tradable stock. So if for some reason they break through this one, chase it up. So I just talked about the opportunity long term, and now I'm telling you to chase it up. I said if they break through this one. So now we're talking trading versus an investment concept. If it falls into below 20, it's a buyable dip because that's what's happened. So I'm very realistic about what's going on with the stock. Going into 26, it's going to face resistance. That's my opinion. Losing 22 might bring you that $20 quickly. Somebody who chased it up here doesn't know charts. All they had to do is look left. What happened last time they were here? 3 fails. Why would you buy it into 3 fails? Until they take those fails out, then you chase it. So little lesson in technical analysis. In fact, it's not. It's just logical sense, common sense. Wherever I decide to buy a stock, the last step I make, look left. Hey, what happened the last time the stock got here? Like somebody who capitulated down here, same mistake as that person. Like if you bought puts right here, you didn't look left. Because if you looked left twice at least, without me expanding the view, they've been huge bounces. Now, that was also a significant level from January. So whoever bought puts here, they need to pull out a Costanza move next time. Whatever you think you need to do the opposite. You'll probably win more often than not. So again, has resistance into this area, 25, more so at 26. Use this candle, the stomach of this one. If it breaks out of this, chase it. If it loses this one, it might give you the entry point. So any dips into this zone would be intriguing for me to buy for a swing trade opportunity. I'm not an investor with this one, like hoping it's going to go to the moon because of the reasons I just told you. I'm not ragging on the company. So I think there's RIDE. Aren't they the ones that are almost running out of money? So great company. The truck looks fantastic. The stock's trying to bottom, but it tried that before and before and before and before. And why bother with extra cash issues? So you heard the term, you can go out of business while making money or something like that. So they might have a legitimate business, but if they're running out of money, then they have to give a lot of concessions. So for that reason, I wouldn't touch that one. HYLN. So if you've been watching my videos, you know the story. At 18, when it lost 18, I said, get out because it's going to, I said 0 at the time, but I didn't say it's going out of business. I said the stock mathematically should go to 0, if not a negative number. Clearly that was a ridiculous statement, and that's what I said at the time when I said it. And I said, but realistically, they're probably going to target 12, maybe 8. And I just got lambasted in the notes section. What are you talking about? Well, it was $6 last week. Actually, this week. So what's going on here is people are being unrealistic. So whatever is going on with the chart is going to continue to go on until the pattern changes. And let me walk you through the pattern. They bottom, they double bottom, and everybody goes, well, this is it. That's the big one. And they come back and they lose said bottom and they make a new low. You can go back and you can see it repeat and repeat and repeat. What does that mean? Every pop, if it gets me out of trouble with this ticker, I should get out, regardless of how in love I am with the company and their Hypertruck and the CEO. I forget the name. Somebody called him my CEO, like in the comments. He said our CEO. I was like, wait, you work for the company? No. He said no. I was like, so why would you say our CEO? Well, I'm invested. I was like, you're too emotionally invested. You should probably have somebody else make the decisions for you. So just be realistic. The price action, regardless of how great the company is and the truck and the people, if Wall Street doesn't want it, why keep trying to catch the falling knife? One person borrowed $50,000 on his credit card. He said, oh, I hope my wife doesn't find out before it recovers. And like, oh my God. My only message was, do not average down in a stock that's this speculative. And it is speculative because there's no P&L. There's tiny. So bounces into 8 and 8.4 and 8.5 are exit opportunities, not entry points. Most definitely the case into 10, if not 9.5. So if you see it here on one day, it's up on whatever headline, unless it says they just sold a whole bunch of cars that actually changes the P&L, I would not touch it. Now, if I'm pot invested, I'm not going to add to it. So if I took shares for the super long term based on whatever math I had, I wouldn't add to it. Not advice to anybody, just what I wouldn't do. I would never average down in a stock that doesn't have any fundamentals. Like if it's Apple, I can calculate, okay, this is what it's worth, this is how much it lost, this is what I can recover, so I can kind of average down. Even then, I don't like to do it. All right, Workhorse, that's the company that lost the USPS. One order broke the company, come on. So that's something I wouldn't touch. Same price behavior. Look, every pop gets sold, every quote floor gets broken. Repeat the process. Repeat the process. So machines will continue to doing exactly the same thing until the pattern changes. Then they change the code. So they will stop selling pops. They will start buying dips, and then that's how you establish a bottom, a rounding bottom. Until such time, I wouldn't touch this one either. So did I miss any? LI, I think. Okay, so I think this one has a P&L. I don't know anything about it, but I can see income. So technically, into 32, it's not a buying point, just technically, nothing about the company. Breaking out of 32 would encourage me to say, okay, they're going for 36 with a lot of resistance in between. So if I'm trading it right here today and buying calls, I'm anticipating, which is not something I would do. I would miss out on the next 20 cents in order to get the breakout, or I would buy a dip into 28 if it comes. So if it does, so ideally, what happens is when a stock goes into prior resistance, so the machines look left, unlike humans, and they say, okay, so we're going to sell it here. That's what happened last time, and then it dips a little bit, but then the machines will look left again and say, okay, this is the place to buy it, because that's where they just bought it. They come back and they try to break out from this one again. And if they do, they test it for footing. So even if they fade down to here, that's fine. And then it's off to the races to fill the potential of that breakout, which would be somewhere up here. And coincidentally, that will put us into the next fight zone. Now, these two candles tell me there's going to be a lot of resistance in here. So this is agnostic opinion based on charts. And guess what? If you don't believe in charts, then you're purposely putting yourself at a disadvantage against 80% of the trades out there, because the experts tell us 80% of trading is done by machines, and that's the advantage they have over you if you don't learn charts or get into a group that does this stuff for you. So in our group, all day, every day, hundreds of charts I review, and we post lines that where it would make sense to take longs or not. Like right now, we have a couple of active trades. One from 2 days ago on Grubhub. You can look at the chart. It's up like bazillion %. And because we were ready with lines. GE, long yesterday, popped open today. People booked it. So it's not all fast trades like that, but they do happen. But it's all done by studying charts. So get good at it or get into a group that can help you with that. And otherwise, you're at a disadvantage. and take emotions out. Just look at the chart and decide the entry point. So you can do your homework and you say you love LI, and then you go, okay, when is the best time to avoid the mistake? Avoid the mistake first, and then try to eke out a profit later. Some of the most everybody watching this video, I guarantee you, they've rarely picked a losing stock, and most often the losses come from being too early, too late, timing. So you can eliminate a lot of these timing mistakes just by looking at the charts. Like somebody that bought it up here didn't look left. We just did it for that other ticker, right? Just look left. So from what I said about the other ticker, would this be a good buying point area? No. From here to here, I wouldn't touch it. That's way too close to this failing point. I'll forego a buck, 50 cents. Let's see what they do with it. Repeat the process. Somebody that tried it again here. So if somebody bought calls here, they probably got stopped out here. Get back to here. Oh, this time it's going to go. They bought calls here. They get stopped out here. And that's how market makers make money. Anyway, that's a long enough video, but I think is as honest as it gets on EVs. I like the sector. I don't think it's going to be the all-time winner for all vehicles unless they change battery technologies. It's going to be a hybrid of sorts. I like Tesla first. Actually, NIO is an easier trade than Tesla, cheaper ticker symbol, so it's cheaper options. But I wouldn't short Tesla. On big bad days in Tesla, the easiest way to make money when it's falling out of bed and you can afford to own shares and somebody wants to own shares, they usually sell puts way below current price, way out in time, and they can have book profits the easy way, but that requires them to have a certain size account. Otherwise, they would do a credit put spread instead. All right, Nick signing out.